The CFO of a small or mid-sized bank, they're juggling a lot of different jobs, and they're typically under-resourced. So they've got credit risk, interest rate risk, the balance sheet, liquidity, all these things to focus on. Taxes end up being an afterthought, just a sunk cost that ends up being paid and not really managed. Managing your tax expense is often easier and less detrimental to the overall business than managing other line items. You can trim budgets, you can cut or freeze salaries, you can cut branches, but none of that's gonna have the same impact on the bottom line as effectively managing your tax expense. Banks with consistently low effective tax rates, they're deliberate, they're strategic about tax management. For them, this is intentional, and they do it year in and year out. They can look at all sorts of tax credits. So there's renewable energy tax credits, there's low-income housing tax credits, new markets tax credits. They'll look at bank-owned life insurance, municipal securities, investment subsidiaries. They'll analyze state apportionment. They'll do all sorts of things, but they'll do it year in and year out. And relative to their peers that aren't spending the time and aren't being strategic about it, they really end up standing out. And that not only shows up on the bottom line, but it shows up in the stock price. Tax credits are not new. They've been around since the 60s. Low-income housing tax credits, which a lot of banks already utilize, been around since the mid-80s. And large banks, large corporations, they've been using renewable energy tax credits since the mid-2000s. These are things that others have figured out how to benefit from and use to manage taxes that community banks can still think about. The most interesting thing about renewable energy tax credits are they don't chew up balance sheet, they don't end up requiring a lot of liquidity, and you've got a very short-term return on investment. We're talking 3 to 6 months. For a bank to deliberately manage their tax expense, it doesn't take a lot of resources. It takes intent. It takes focus. It takes the idea that you need a little time, but if you treat it just like you do any of your other expenses, it's something that can be handled and managed strategically. And if you don't necessarily have a tax director or a tax manager, there are a lot of strategic partners out there that can help you with it.